Hi there, welcome back to Prices at the Pumps on SaltWire, our Wednesday weekly look at all things energy related. Scott Squires along with the energy expert Dan McTagg. Dan, a couple of items we're going to get to today, including later on our Ask the Expert segment. But first things first, prices at the pumps set in the Atlantic region tomorrow, Thursday in Newfoundland and Labrador, rest of the Atlantic region on Friday. Dan, what are consumers going to be seeing on those big digital displays when they pull up to the gas station in the next couple of days?
Well, more good news, especially considering that gas prices are now about where they were this time last year, despite increases in carbon taxes. Your gasoline is dropping 2.1 cents a liter in Newfoundland, and for diesel, it'll be down about 3.5, maybe 3.7 cents a liter. So, really, not kind of news we normally get during the summer, as demand is very robust, but markets are completely panicked. And with the meltdown in the markets that we saw earlier this week, instigated by the Japanese yen. It looks like consumers again are going to be the big benefactors here in terms of price. Now, of course, for Prince Edward Island, New Brunswick, and for Nova Scotia, they have one extra day of market numbers, which is today, and markets are surging a little bit. So I'm expecting still only about a 1.9 to 2 cent decrease for gasoline for those three Atlantic provinces, and about a 3.5 cent decrease for diesel. So all in all, hold off until Thursday in Newfoundland and Friday in the rest of Atlantic Canada to gas up and to fill up because you'll save a bit of money.
Driving into work this morning, Dan, on the radio, I was listening to the business report, and they were saying that oil today, this morning, was trading up a little bit per barrel, and that the Canadian dollar had ticked upward a little bit in value. But as we know, things can change second to second, minute to minute, hour to hour. As we talk now, midday on Wednesday, August the 7th, what are you seeing with market prices for oil, and where's the Canadian dollar sitting?
Well, oil has been bouncing around. I mean, last week it gained $3.50 a barrel, then lost $4 a barrel. It's ranging in the area. I'm just looking at the numbers that I had from yesterday in the $73 range, which is significantly lower for WTI than where we were this time last year. And of course, with Brent at about $76 a barrel. One thing that has emerged is the issue of fundamentals, and it came out screaming at every energy investor, money manager, that you've got it wrong. Demand is much higher than you've estimated. Supply is just not there. And we continue to languish about 500,000 barrels every single day. Demand for oil will be 106, 107 million barrels by 2025. That is global demand. Supply will be 103 million. So that shows, again, a real big disconnect between what markets are anticipating, and they tend to fall for the fake headlines, the things like that have nothing to do with demand or supply uh, as it exists, and that's things like worried about interest rates or jobs numbers or anything that might be seen as bullish they perceive as negative because it means interest rates remain lower for longer, higher for longer in the United States, and that could mean some trouble for the economy down the road. That's the theory. But what they're doing is they're ignoring and completely discounting reality. That's why I think money managers no longer really follow the fundamentals. They are really more woke capitalists who spend a lot of their time worrying about ESG mandates and all sorts of other investment strategies that are leading the world to a very grim economic outlook. Having said all that, I think we're on the verge of what could be major geopolitical events. Hopefully not, but in the Middle East, and that could translate into much higher prices in the days to come.
Well, you segued beautifully into what my next question was going to be, which is about geopolitical events. Russia, the invasion of Ukraine continues. That whole situation over there is still quite volatile. And you mentioned it, certainly tensions ramping up in the Middle East region. Very recently, the United States has sent several battle groups over there, aircraft carriers, fighter jets, missile defense systems, you name it. And, we're wondering from one moment to the next if and when Iran is potentially going to launch this major attack. I say all that because it seems to me once upon a time, if these really major, serious geopolitical events were going on, there would be a much bigger effect on the price of a barrel of oil just because of, nervousness and skittishness and all of that. To your best guess and knowledge, Dan, why are we not seeing that right now?
I think the markets have been taken over in the past little while by artificial intelligence, people using algorithms to make their positions known, and this whole culture that basically says there is no future for fossil fuels, which is absurd to the nth degree. Because, as pointed out, we are seeing about a 6% growth every decade in fuel consumption, like it or not, as global population increases, as demand from many parts of the world to address the making of different of these different products, as well as AI itself, which is a huge consumer. The data points required for AI are going to use a lot more electricity, and demand for energy is going to be that much greater. It really means that going forward, the world is going to be using more energy, not less, and that anybody who thinks otherwise is either pushing a very dangerous agenda of deprivation, economic and otherwise, or is simply not clued in. And I suspect that the current crop of investors who think biotech and AI is the future are going to be sadly disappointed, because the players like OPEC are sitting back and saying, "You guys are dysfunctional. You're going to eventually have to come back to reality, and your economies cannot continue down this road of building things that don't work, that don't provide economic activity, or don't respond to and do not stimulate the economic activity. And you do need growth in your economy." So there's a lot in that, but I think that we're starting to see a bit of a signal change away from the way things have been for the past 5 or 7 years, with this so-called transition to what it looks like economic perdition for most, and back to reality, which is grow your economy, make sure it's sustainable, check the boxes, ensure that people have social programs to meet the ends that we all expect, and enjoy a little bit of the prosperity that is really the blessing of every Canadian and others around the world.
And Dan, I know we've touched on this before, but I think it's worth mentioning again. Because I saw a post the other day that talked about a certain gas station that had run out of regular unleaded, and that they were selling Supreme, or the highest grade, for the regular price, and people were clamoring to get there. And every time I go to the pump, I still look at it. I'm like, oh well, I want to take care of my car. I want to treat it well. Should I spend the extra 10 or 12 cents a liter to put premium in my car? But Dan, I think I may have asked you to weigh on this before, but is there really a difference to your vehicle between the regular unleaded and then the mid grade and then the premium, the one that's supposed to give you the best of everything? What are the differences, and should consumers really think about it?
You're wasting your money if you're spending on premium if your vehicle is designed for regular 87 octane. Octane is really the resistance to knocking, and that's to make sure the engine works well. Uh, Engines that run on regular, have advanced timing, and they can detect slight differences in the grades and quality of gasoline. So, no need to go spend the extra 30 cents a liter or 20 cents a liter to buy premium when regular will do. In fact, it's interesting you should point this fact out, Scott, because at this time of year, what we add to gasoline to for summer blend to bring down the RVP, the read vapor pressure. So that basically what's put in regular gasoline tends to be a lot more alkylates, which is the difference between the regular and the premium. So summer gasoline tends to be a little bit different than the winter blend, which of course uses more butane. So you really don't need to spend the extra money, and you are not going to see a big difference in terms of the distance you get or the mileage that you get by going from regular to premium. And it does nothing for your engine. So it's a myth. Unless your car requires premium, don't buy it. You don't need it.
Now I'm going to feel much better, Dan, when I pull up to the pumps and I'm putting the regular unleaded in to save those extra few cents, knowing that I'm still treating my car pretty well.
Yep. Just yeah, it's better better you maintain it. Get the filter changed, the oil filter, the air filter. Don't worry about what's the quality of the fuel. The vehicle can look after itself, especially vehicles made over the past 20 years get better and better on that kind of fuel economy, efficiency, and the sensors are usually working in such a way that the vehicle gets optimum mileage with regular. So I'm a big advocate. And by the way, I don't come at this because of my energy background. I actually worked for Toyota Canada many years ago, and it was the same thing then. We had many people thinking that premium was somehow cleaner, better, and would do more for them. That's a myth, and it should be dispelled at every turn to save you money as well as to keep you in touch with the truth.
There's Dan McTagg bringing more great information to the consumers. All right, Dan, we're going to wind up here shortly, but now it is time for Ask the Expert. Okay, Dan, it is Ask the Expert for this week. This week's question comes from Susan in Bridgewater, Dan. And okay. Susan wants to know, what factors are expected to influence energy prices in Atlantic Canada as we transition into the fall months? And what is the overall outlook for consumers and businesses? And thank you, Susan in Bridgewater, for your question.
Great question, Susan. And yes, after September 15th, we go back to winter blend gasoline. That should save you about anywhere from 10 to 12 cents a liter. With taxes, of course, at 15%, it might be even 13 or 14 cents a liter. We saw that big increase back in April. We're going to see that decrease on the 15th of September or the week just after that. That's because we're no longer required to have the stringent requirement of summer gasoline, which is that it resists evaporation under warmer conditions. The reverse is true for diesel. Now, diesel prices tend to go up in the winter because they're a proxy for heating oil, and we use a lot of that here in Atlantic Canada and along the U.S. East Coast seaboard. So it's likely to see a move up of about 10 cents a liter as we get towards October for diesel, and down at least 10 cents a liter for gasoline. So great time for people driving cars, but not so great if you have to use diesel because the price tends to go up. That, of course, could all be put in greater perspective because the federal government's second carbon tax, the Clean Fuel Standard, will probably add another 2 cents a liter at some point between now and January 1st. So by now, I mean at the beginning of September to January 1st. So that could mean, all in all, a decrease of about only 8 or 10 cents a liter for gasoline, and an increase of about 12 to 13 cents on average for diesel and for home heating oil.
Hard to believe we're talking about the fall and winter months ahead, but not that far away as we march our way through August. Dan, always a pleasure to have you here on Prices at the Pumps on SaltWire, but when you're not hanging out with us here, where can folks find you?
Yeah, present at affordableenergy.ca. You can see from behind here, or affordableenergy.ca itself, just leave a message, or sometimes on Twitter. When I do engage, Gas Price Wizard is my handle, and those are really the two means in which I can communicate and get information back to people as they wish. Gas Price Wizard, of course, does provide gas price predictions the day before they happen. So always consult those. If you're not watching SaltWire here, you're not going to get the information you need day to day to know where gas prices are going.
Appreciate it, Dan. As always, having your insights and expertise here is a wonderful thing. We wish you well for the rest of this day. Enjoy your weekend ahead, and perhaps we should get together and do this again next week, Dan. What do you think?
Let's try and do that. That sounds like a great plan for me.
All right, perfect. And before I let you go, I should ask, what's the weather like up in your neck of the woods there in Ontario? The last few days, it's cooled off quite a bit here. And when I say cooled off, that's compared to the heat wave we had last week, where it was up into the low 30s with humidex values. Today, the last couple of days, it's been in the low to mid 20s, no humidity, kind of damp. What's it like up there in Ontario, Dan?
Well, right now we're looking at fairly decent weather, low 20s, 21, 22. First time it's been sunny in a few days, so we've had a little bit of rain, much needed, by the way, so farmers should be happy, as should the price of our food if we have good temps like this. It's been a great summer so far. A lot of water, but a lot of sun as well to dry it all up. So all in all, I'd give this summer a 9 on 10 for sure.
giving a little nod to our weather specialist, Alistair Alders, talking about the weather on prices at the pumps. Dan, great to see you again. Look forward to chatting again next week. Thank you.
Take care. Bye for now, Scott.
Bye.